All right, it's Thursday, March 7th. This is a SPY pre-opening update and a daily recap from yesterday. There's still a long way to go. It's almost 4 hours before the actual open. I just awoke early, decided to check what the markets were doing. But you can see yesterday here, you had the two up red bar. So it's kind of a two up failure looking bar, which leads to the expectation of a two down bar going into today. That would then resume the weekly downtrend that's in place, where we still have a red week that took out the high the previous week and is working its way lower to the the low of last week on an outside bar. However, we did find a little support here, and this, you always look at these tails and you kind of see, those are areas where buying came in before, and we're getting a little support there as well. But it's temporary at the moment, and if we can come down here on a two down day, that turns the monthly chart back to red. That's this green line here. We're holding that, we're trying to hold that. So you can see on that monthly chart, after starting up for 5 months in a row, we're just right on the edge of either staying green and continuing the uptrend, or possibly the start of a red month or a red consolidation month or something like that. But you have to get below that green line. And, obviously in this case, that would also be a two down day. What's interesting is, as I looked at the market here, pre-market range so far, with a while to go, we're at two interesting inflection points. If I look at the 1 minute chart, it's obviously moving up here a little bit temporarily here in the morning, after kind of moving a little lower for a while. So if you look at the blue range at the moment, and there's still a long way to go, it's really at two key points. Number one, the lows are right here on yesterday's low and that green line. So if we break below there, and continue, that's a very good sign of the pullback in the market unfolding. If we start above there, then we're starting above the midpoint of the prior day, but that goes into this selling tail from yesterday up here. So you really have to see, if you continue higher at that point, let's say the blue lines kind of hold here near the open. What you're looking at here is this was a two up day yesterday that kind of failed to reach its target up here. And that's kind of the whole theme of strat price action, is looking for broadening formation. So when you get a two up day, you kind of have a target up here. And what's always exciting to me is when you have a specific target and you don't reach it and then go the other way, that becomes even a higher probability trade. So that's why the two down, and that's what you're expecting on this kind of bar. And yet we're starting, the market's trying to rally a little bit. So let's see on the 15-minute chart where this ends up. Keep that in mind. I think it's interesting either way. In other words, if you break to the upside, I just don't see this in compound fashion, being a two up that's up here and then goes up again and tries to, this is the key bar you're trying to target, the highs up here, and it just doesn't look like the type of market that wants to get up there. So I'd play it, but I'd also get very excited on a failure. Let's say the first bar or so goes up and breaks above that, the first 15-minute bar, breaks above here and tries up, but then can't even reach, anything. It comes below that first 15-minute bar. That's a failure up here. And I'd actually, and maybe let's say the 15-minute chart starts in the middle of this range and then starts up. I'd look for it to target whatever the pre-market highs are, but then ultimately fail. Although, again, you can nimbly try those long trades. It just doesn't look like the type of, daily chart that's going to work towards that target. But let's see what happens. On the downside, maybe you'll have to start here near the midpoint of the prior day up high and then start red right out of the gates and see if that could lead to a two down. So the higher we go, it's a little bit trickier on that opening, if we open up there, to then, project the two down. Ideally, I would have liked, that two down to occur right, kind of right below the midpoint of this bar, and then start immediately lower, confirm everything to the downside. So I just, we'll see what happens. I just think it's interesting the way the pre-market range is forming. It's kind of moving up to the midpoint of yesterday and to that key two down area here. So it's almost like whichever way it goes, you got to take that, but I'm still biased to the downside given the overall look of the chart, so I thought I'd point that out. And again, the downside, you can be patient. I mean, it has to just get below this green line and a two down to continue lower, because that's the monthly target, and in this case, that's a two down day that you're looking for to resume the downtrend. So let's just see what happens. Just thought I'd kind of recap. And then yesterday, finally, let's just recap it. You did have that two up, daily failure. What happened was the market out of the gates, and I shot some videos on this, gave you an opportunity to sell, but it wasn't the greatest sell because you were starting up very high near the top of this range. After this red bar and a little buying tail, the market was gapping up. Let's see where it is. Right to here. So all of a sudden, like I said, it wasn't so clear that you were going to take out that low on this day. I talked about after this big red day that kind of took out some targets down here that maybe you're in for some consolidation, but it gave you an opening sell signal to see maybe you were just gapping up to the high of the range and going to work down to the bottom of the range on this day in a consolidation. So I bought some puts here and discussed how that was the opening trade on bar number 2, and then it kind of held. I scaled, knowing that you were just making that first move to the halfway point of the first of yesterday. You didn't really know what was going to happen at that point because you already took out the highs of yesterday. I discussed that's why I scaled out here, just to see what would develop. Were you just going to have an orderly pause and continue down into the range, or was this going to be a reversal area? And on this big green bar here, it was pretty clear you were taking out the high of that first bar and you were going to watch and see. So it did that. It went up, paused, tried to make a second push, and then I shot a video how after this big red bar formed, I bought some puts here on the first pullback. If you look at the 1 minute chart, once it kind of made that big breakdown, well, I'd have to zoom it out a little bit, but it made the big breakdown here, came up and then started down. I bought some puts right in this area. So it ended up being a nice little trade towards the end of the day. Never really took out the lows that I thought would happen. Go back to the 15-minute chart. So on that first push down, bought some puts in here, let's say, and I was thinking we can get those lows, and we kind of just got there a little bit, but never really broke through. So it's just an afternoon trade to the downside. I thought we might end with this kind of bar here, or shoot a red bar, and we did, and that should project lower. But for the moment, the market, is, like I said, vacillating in this range. So we'll see what happens, but those are some of the key levels and the analysis on the day. Kind of the way I look at the 15-minute chart each day relative to the pre-market range, and obviously the bigger picture expectations on the daily chart and the weekly chart. So let's see what happens today. I'm still biased to the downside, but price action is going to have to lead the way as always.